to the 7th lecture where we will be covering module 2, and we will be beginning with module 2, and module 2 is nothing but income from salaries. So under this module, income from salaries, let us see what all is being covered as per VTU syllabus. So as per VTU syllabus, it covers introduction, like introduction to salary, what is the meaning of salary, what is the meaning of allowances, valuation and taxability of perquisites and what are perquisites, death cum retirement benefits, deduction against salary, income from house property is also covered under this module, but only theory. In respect of income from house property, only theory is covered, and you have problems on salary income. So all this is theory part, and then you have full-fledged problems or breaked up problems on problem on salary income. Remember students, you don't have problems on income from house property. In respect of that, you just have the theory part. So let us begin and let us see what are we going to cover in today's lecture. So in today's lecture, we are going to cover the introduction part, what is the meaning of salary, what are allowances, and what is deduction against salary. Now, the deduction against salary is the F point. That is why I've written there that we will be covering in today's session. So let us begin. So let us know what is the meaning of salary and when it is chargeable to tax. Salary is nothing but every payment made by an employer to his employee for services rendered would be chargeable to tax as income from salaries. So the first thing that you need to remember is any payment which an employer is going to make to an employee. So what is the most important condition for a payment to be taxed under income from salary? That there has to be an employer-employee relationship. So when you know that you're receiving any income, first you have to see the source from which you're receiving the income. If the source is from an employer and you are an employee, if that relationship exists, then only such particular payment or such particular receipt will be chargeable to tax as income from salaries. We already know that to whatever incomes that is received by an SSE, they are to be bifurcated under 5 heads of income. One such head of income is income from salaries. So whatever payment we receive and we are going to charge it to income from salaries, under which head it is going to go? Income from salaries is taxed under the head income from salaries. There are 5 heads of income: income from salaries, house property, income from business and profession, income from capital gains, and income from other sources. Now, first thing that you need to know is there has to be an employer-employee relationship. Now, you may tell me that, madam, what if an employee is working part-time or full-time? Whatever payment he is receiving, will it be taxed under income from head salaries? So, my dear students, irrespective he is working as part-time employee or a full-time employee, but if there exists an employer-employee relationship, then the entire receipt is to be taxed as income from head salaries. Now, what if you'll tell that, madam, an employee has received the salary, but he has foregone its salary? What do you mean by foregone his salary? Like he's told the employer that I want to donate my salary to some charitable institution. So, irrespective where the employee is going to put his money, the entire amount is going to be taxed under the head income from salaries. So, in order that the salaries be taxed under this head, application of income is not to be considered. Once he receives the income, irrespective where he is going to apply it means either he is going to give to a charitable institution, use for himself, or whatever it is. Once he receives an income from an employer, it becomes it has to be taxed under the head income from salaries. So I hope you all understood what is this, what is what type of income has to be taxed under the head salaries. So for example, we can say that suppose if a film actress, suppose Madhuri Dixit, is employed in only Chopra films. Yes, Chopra films. She is employed only in those films, and she's allowed to, and she's receiving a monthly remuneration of suppose say 12 lakhs. So here Chopra Films is paying monthly remuneration to Madhuri Dixit for Madhuri Dixit being playing the role of an actress in all the films related to only Chopra Films. So here what is happening? There is an employer-employee relationship. So whatever income will be received by Madhuri Dixit, it will be taxable under the head income from salaries. In the same example, suppose if Madhuri Dixit is working for different producers and she's going to do films under different set of producers and various films. And when she'll receive money from such producers, here the income will not be chargeable under the head income from salaries, but it will be chargeable under the head income from business or profession, because it is a profession. So why? Because there the employer-employee relationship is not existing, because she's working for different employers, not only Yashraj Films or Chopra Films. She's working for multiple producers, and where there is no employer-employee relationship. Similarly, to just give you an example so that you'll understand this better, is whatever commission is received by a director. Now we know that a director is an employee of the company who looks into the management of the company, who takes care of the company. So here whatever commission the director is receiving, so it will be charged as in director's has hands as income from salaries, because there is an employer-employee relationship. Similarly, suppose if a partner is receiving the profit of the firm. Now you know if there is a partnership firm and every partner is receiving profits of the firm. Now, will it be chargeable under the head income from salaries? No, because the firm is not the employer and the partners are not the employee. All the partners are the employer in the partnership firm. So, since there is no employer-employee relationship, it will not be taxed under income from head salaries. So, all you need to know is only when there is an employer-employee relationship and the payment is received by an employer, then it will be taxable in the hands of the employee under the head income from salaries. Next is income from the salary chapter, or the taxability under salary is covered under from section 15 to section 17. Remember students, section 15 to 17 of Income Tax Act deals with only the chargeability under income from head salaries. So section 15 is the charging section. Now what do you mean by charging section? Like, I am the employee, I am receiving salary. Now, when will this salary be charged to tax? Obviously, so this is called charging section. Charging section means levy. When will my income from salary be chargeable to tax? So this is covered under section 15. Section 16 of the Income Tax Act is again relating to income from salaries, where there is a deduction allowable. As I told you that in every head of income, let it be income from salary, house property, business or profession, capital gains or other sources, in every head of income, government has given you certain deductions. Certain deductions means where the amount of your salary will, taxable amount of your salary will be reduced, and you need to pay income tax only on the net salary. So what are the different deductions that are given by the government in respect of income from salaries is discussed under section 16. And section 17 deals about the meaning of what is salary, what is perquisites, what is profits in lieu of salary. So it deals about other provisions relating to income from head salaries. So remember, students, section 15 to section 17 of Income Tax Act is only and only relating to income from salaries. So let us start and understand all these sections. Section 15, as we know, is a charging section. And I told you what is the meaning of charging section means when will the payment or the salary that I'm receiving, am an employee. In my entire uh, lecture, I will be considering me as an employee. So I as an employee, then will be my income, what I'm receiving as salary from my employer, will be chargeable to tax. So remember students, section 15 is charging section. So remember, salary is chargeable to tax either on due basis or receipt basis, whichever is earlier. So what is the meaning of due basis? Due means when it is accrued. Receipt means when I have actually received the salary in my bank account, maybe in cash, check, whatever. So salary is chargeable either when it is accrued for the particular month or when I've actually received it, whichever is earlier. Now, we know that a particular year starts from April and ends in March of the succeeding year. So, suppose March month's salary is due actually in the month of March, but I'm receiving it in suppose April 15th. So, I will be charging that March month's salary not in April, but in March itself because salary is chargeable to tax either on due basis or receipt basis, whichever is earlier. Now, you all will tell me or ask me, Madam, what if we have received advance salary? Now, what is the meaning of advance salary? Advance salary is nothing but amount that is received before it is actually due. So maybe next 6 months salary, it is not due, but I want it earlier. So my employer has given me that salary in advance. So salary received in advance means I'm taxable on receipt basis. As we know, the basis that the salary should be taxable on due basis or receipt basis, whichever is earlier. So advance salary is always taxable on receipt basis. Now remember students, advance salary is different and advance against salary is different. Now what do you mean advance against salary? It is nothing but loan taken by the employer from the employer by the employee. So note, a loan taken from employer is not taxable as advance salary. There's difference between loan that you're taking from the employer and there's a difference between advance salary. So advanced salary is always taxable on receipt basis. Next, arrears of salary. What do you mean by arrears of salary? Actually, your salary was due for a particular month, but you have not received it. Because even, for example, in this coronavirus period, there are many institutions who did not pay salary in time, or many people, many employees have not received salary for 6 months, 7 months because of this lockdown. This is just an example and a fact also. So this becomes arrears in salary. So arrear on salary should be actually, if you go to see this base, if you consider this base, it should be actually chargeable to tax on due basis. But it can be chargeable on tax on receipt basis if it has not been subjected to tax earlier on due basis. So this is the charging section, section number 15, which says that salary should be taxable either on due basis or receipt basis, whichever is earlier. Next. Next, let us see section 16. We know that there are three sections which are related to find out the taxability under the head income from salaries. That is section number 15 of Income Tax Act, which speaks about the charging section, section number 16. 16 speaks about deduction against salary. Now, what do you mean by this? By this, I mean that the entire salary what you're receiving is not chargeable to tax. Government has given us certain deductions with the help of which we can reduce the amount of a salary liable to be taxed. So let us see what is the deductions. Deduction number one is a standard deduction. irrespective of where you're working, with whom you're working, what is your salary, irrespective of that, standard deduction is given to everyone, which is covered under section 16, clause IA. The standard deduction is uniform to everyone, which is rupees 50,000. This rupees 50,000 is for the assessment year 2021. In the earlier assessment year 1920, the limit was 40,000. Now it is increased to rupees 50,000. So remember, the first deduction that you will get under the head salary, only and only these deductions are only against salary and none other heads of income. So the first is a standard deduction, which is rupees 50,000, and it is standard for everyone. The second deduction is entertainment allowance. Now, before we understand what is the deduction in respect of entertainment allowance, let us understand what is the meaning of entertainment allowance. So, allowance is nothing but a fund or an amount given to the employee. By whom? By the company, by the employer. Why? To pay for the clients or customers. Like usually the many employees take their customers for outings, for drinks, for meetings, for hotel stay, for their food, for their accommodation. So entertainment allowance is an allowance given by an employer to the employee in order to cater the or to meet the needs of the customers, to keep them entertained, to keep the customers entertained. The allowance is given. Entertainment can be in the form of either drinks, meetings, food, hotel stay, or any other thing. So remember, entertainment allowance, this deduction is given only and only to government employees. This deduction is only given to government employees. If it is a private employee, he will not get this deduction. And this is covered under section 16, subsection 2. Now, what is the amount of deduction that is going to be given? The amount of deduction will be the lower of 1/5 of his basic salary, or rupees 5,000, or actual entertainment allowance received, whichever is lower. Among these three, whichever is the lowest amount, that will be the amount of deduction given under section 16, clause 2, that is entertainment allowance. Next is professional tax. This deduction is given under section 16, clause 3, which says that professional tax is nothing but a tax on your profession. So the total amount by the way of professional tax payable in respect of any one person shall not exceed rupees 2,500 per annum. So obviously deduction also you will get 2,500 only. So remember, these are the three deductions. Whenever you all are solving problems on income under the head salary, you need to consider these three deductions and then get the net salary on which the net tax will be payable. So number one, standard deduction given to everyone, rupees 50,000. This amount also is fixed irrespective of everything. Next, entertainment allowance. This is only and only given to government employees. What is the amount of deduction given? Lowest of these three, that is 1/5 of the basic salary, or rupees 5,000, or actual entertainment allowance received. Third one is professional tax. Professional tax usually cannot exceed 2,500 per annum. So how much professional tax is actually given? That will be allowed as a deduction, or maximum 2,500 per annum. So we have understood section 15, charging section, section 16, which is the section relating to deduction against salary. Now let us understand section 17. Under section 17, we have different meanings, like what is the meaning of salary, what is the meaning of perquisites, what is the meaning of profits in lieu of salary. But first, let us understand what is the term salary, what actually salary comprises of. So section 17, subsection 1, define the term salary. It is an inclusive definition and includes monetary as well as non-monetary items. We cannot say that anything received in cash only is salary. So when I say monetary and non-monetary, it means anything received in kind also that you're receiving from your employer can also fall under the definition of salary or meaning of salary. So salary under section 17 subsection 1 includes the following: wages, any annuity or pension, any gratuity, any fees, commission, perquisites, or profit in lieu or addition to any salary or wages. Any advance of salary is also salary. Any payment received in respect of which period of leave is not availed, that is leave encashment. Provident fund also comes under the definition of salary. In Provident Fund, if the portion of annual accretion in any previous year to the balance at the credit of an employee participating in a recognized Provident Fund to the extent it is taxable, then it will fall under the definition of salary. Transferred balance in recognized Provident Fund, contribution made by central government or any other employer in the previous year to the pension scheme that is referred under section 80 CCD. Now, what is the meaning of this gratuity, fees, commission, provident fund, leave encashment? I will explain you in the very next slide. So just remember, salary means all these things means salary. So in the very next slide, I'll show you the format of how income from head salary has to be determined, and we will see what does each term stand for, what does gratuity stands for, what does leave encashment stands for, what does provident fund stands for. So let us understand. So this is a performer for computation of income under the head salary. So students, whenever you are given a sum, a full-fledged sum, where you are supposed to calculate what is the income from head salary, at that time you need to consider this format and remember this format, and based on this format you'll just need to put in the figures, and then you will get what is the income from head salaries. So first thing is the basic salary. Whatever basic salary the employee is receiving from the employer, you will have to write it here. Next is fees or commission. Now, since basic salary is self-explanatory, commission is self-explanatory, I'm not going to explain it in detail. Okay. Next is bonus. Bonus is the additional amount that is received once a year or maybe twice a year. Okay, for the extra work done by an employee. Next is allowances. Now, what do you mean by allowance? So, allowance is nothing but it is a benefit. Okay, it is a payment that is made by an employer to his employee, okay, in addition to his basic salary. So to meet some of his expenditure, see, allowances is nothing but when an employer is giving some additional amount to the employee to meet certain of his other expenditures other than his basic salary, is called as allowance. In detail, we will also be seeing what is the meaning of allowance. Now, what is perquisites? Perquisites is nothing but additional benefit that is given by an employer to his employee, okay, and perquisite is not given to everyone. Perquisite is only given to few categories of employers who fall in the high grade level. Perquisites are given to those people. Now, perquisites can be monetary, it can be non-monetary. It is not necessary that perquisites are only in the form of monetary terms. It can be in non-monetary terms also. For example, we can say that a director of a company is getting a house to stay. Like the company is providing the director a house to stay, or maybe a driver with the car. Okay, so all these are perquisites. These are the extra benefit advantage that is given to the employee by the employer, which can be either monetary or non-monetary. Next is voluntary retirement compensation. So what is the meaning of voluntary retirement compensation? See, when any employee wants to voluntarily leave the organization, okay, And if he is a good, reputed employee of the organization, because he is leaving the organization, the employer will give him some amount of compensation. So that compensation at the time of retirement, when the employee himself leaves the organization, it will be chargeable under the head income from head salaries. Retrenchment compensation. Now, retrenchment compensation means what? Many a time, certain employees are being transferred to some other cities or other branches, or many a times what happens, the company is closing down. So it is it is telling the employees to leave the organization when the business is not doing so well, when the companies are not doing so well, and when the companies are planning to shut down, it will usually remove all the employees or some of the employees and transfer some of the employees somewhere else. So whatever compensation is provided by the company on that particular thing, it is called retrenchment compensation. And whatever amount is received by the employee as retrenchment compensation, it will be taxable under the head income from salaries. Next is leave travel concession. When any employee is going for any leave travel and some amount of it is paid by the company, okay, then whatever amount is paid by the company, it will be chargeable under the head income from salaries. Next is leave encashment. Now, what is the meaning of leave encashment? See, students, we know that employees are generally allowed to take leaves during their period of service, right? Now, certain employees may avail all the leaves what they have, and certain employees they may not avail all the leaves. Then the leaves, suppose if employee is liable for 30 leaves in a year and he is availed for only suppose 15 leaves, then remaining 15 leaves will either get lapsed or they'll get accumulated. Okay, or they will be allowed to be encashed by the organization. Encashed means the number of leaves that is not taken by the employee, okay, the employee can encash them either at the time of termination or retirement, or yearly it can encash the leave. Next is gratuity. Now, what is the meaning of gratuity? Gratuity is nothing but again a payment which is made by the employer to the employee for the for appreciation of the services rendered by an employee. See, when an employee is working in an organization for more than 5 years, he becomes a dedicated and loyal. He's considered to be a dedicated and loyal employee of that organization. So employer is leaving the when the employee is leaving the organization, the employer usually gives some amount as gratuity for the appreciating the services that he has provided since so many years in the organization. So whatever amount is received as gratuity, it will be taxable under the head income from salaries. Next is uncommuted pension and commuted pension. Now, what do you mean by pension, first of all? First of all, what is pension? So pension, as we know, is nothing but a periodic payment, okay, which is made by the organization or companies, or if it's working in a government company, then government. Okay, it is given, okay, for the services that is already rendered after his retirement. So pension is usually given after retirement. Why? Because of the services that he had rendered, okay, and it is a periodic payment. Now there are two types of pension: uncommuted and commuted. Now, what is uncommuted pension? Uncommuted pension means pension that you're receiving periodically. Means suppose if the employee has retired and is receiving pension every month from the company, so periodically he's receiving pension, so it is said to be uncommuted pension. It will be again chargeable to tax under income from head salaries. And commuted pension means where he is receiving a lump sum amount, where the company is giving a lump sum amount as pension to the employee and not giving the pension in a periodic format. So it is said to be uncommuted, it is said to be commuted pension. So remember, if any amount is received in lump sum as pension, it is coming under commuted pension. And if it is received periodically, it is said to be uncommuted pension. Next is Provident Fund. Now, we know what is Provident Fund. Provident Fund is nothing but a scheme. What is this scheme? This scheme is to give the benefits to an employee at the time of his retirement, so that the employer-employee both put some amount of their salary in this fund, so that this fund grows. Okay, with the interest rate, this fund will obviously grow, and this amount will be beneficial to the employee at the time of his retirement. So there are different types of provident fund, like recognized provident fund, unrecognized provident fund, statutory provident fund, public provident fund, which in detail we have a part we will be studying in the next next lecture of the same module. So when we add up all these elements, we get gross salary. Now, as we know that gross salary is not chargeable to tax because government is giving certain deductions under section 16, that is standard deduction, entertainment allowance, and professional tax. So when we deduct all these three from gross salary, we get income from the head salary. This income from the head salary will be chargeable to tax, and it is also called as net salary. So I hope you understood what is the format for calculation of income under the head salaries. So in detail, students, we will be studying how to calculate the amount of allowances, how to calculate the amount of perquisites, voluntary retirement compensation, retention compensation, because some of these elements that are mentioned here are not 100% chargeable to tax. There are certain exemptions for even perquisites, for even allowances. So we will be individually seeing all these calculations. But for any sum on income from head salaries, you have to just remember this format, okay? And based on this, put in the figures here and you will derive at the net salary or income from the head salary. Now we will be seeing what is allowances. See, basic salary is fully chargeable to tax, you can take it completely. Fees or commission, fully chargeable to tax, you can take it completely. Bonus is fully chargeable to tax. You can take the entire amount of bonus to tax. But in respect of allowances, let us now understand what is allowances, which allowance is fully taxable, which allowance is fully exempt, which allowance is partially exempt and partially taxable. Okay, so now let us understand what are allowances. Allowances are nothing but they are the amount that are given to the employees to meet some particular requirements, and it is given by the employer to the employees. Okay, now there are certain allowances which are fully taxable. Now when I say fully taxable means whatever amount you're receiving from these allowances, you have to completely take it to charge under the tax. Okay, when I say partly taxable, that means this entire allowance what you're receiving from the what I'll be receiving from the company, it will not be chargeable to tax. Only a part of that amount will be chargeable to tax. And fully exempt means these allowances when I'm receiving, okay, it will be completely 100% exempt to tax. That means your allowances will again be divided into three parts: fully taxable, where I'm going to take the 100% amount here; partially taxable, where I'm just going to deduct the exemptions and take the taxable amount in the outer column; and exempt. Now, if it is exempt, I need not consider here. So here it will be zero if the allowance is an exempt allowance. So let us see fully taxable. Let us first understand fully taxable. Now, if in the problem or if any employer is giving employee any of these allowance, okay, you need not do any calculation, just take the 100% amount of this allowance in the outer column while calculating income from head salaries. Now what is the meaning of dearness allowance? Let us understand the meaning of these allowance one by one. What is dearness allowance? Now, dearness allowance is nothing but a amount, a money, monetary value that is given by an employer to his employee to compensate for the loss of purchasing power of money due to increase in prices. See, usually the employee is getting a basic salary. Over and above, if he's getting dearness allowance, it means that that money is given in order to meet the expenses of the employee. Okay, and the expenses of the employee are due to increase in the prices due to the purchasing power of money has increased. So in order to meet those expenses, dearness allowance is given by the company to the employee. Next is overtime allowance. Once you'll understand what is the meaning of this allowance, then we'll proceed further. Overtime allowance is nothing but many a times there is a fixed timing for any employee to work in an organization. Suppose it is 9 to 5, and if the employee is working more than his working hours, if the employee is working more than his working hours in the organization, then for the time which he exceeds other than the working hours, overtime money or allowance is given to such employees. So it is called overtime allowance. So that also is 100% taxable. Next is fixed medical allowance. So fixed medical allowance is nothing but it is a fixed amount or rate which is given for the medical treatment of the employee, irrespective of actual expenditure. Suppose the actual expenditure, medical expenditure of the employee is 5,000. But irrespective of whatever is the actual expenditure, the fixed medical allowance is a fixed amount that is given to the employer, given by the employer to the employee. Next is city compensatory allowance. Now, city compensatory allowance is given actually to the lower income group. It is given to the lower income group employee, and it is just to meet the cost of living in certain cities. Even like dearness allowance, this also is 100% taxable to 100% chargeable to tax. Next is interim allowance. There is one final allowance. Final allowance is which is given only once a year. Interim allowance is a payment that is made twice a year instead of final allowance. Next is servant allowance. Now, what do you mean by servant allowance? Servant allowance is usually given to those employees who are at a higher post and for compensating them for the payments made by them in keeping their servants for their personal or domestic work. So servant allowance is usually given not to all the employees but only to the employees of a higher grade, okay, in order to meet their servant expenses. Project allowance. Project allowance is given to meet the project expenses that is borne by the employee while carrying out any of the project relating to the company. Next is tiffin or lunch or dinner allowance. Now, what is this tiffin, lunch, or dinner allowance? This is nothing but it is paid to an employee to meet the expenses of his meals. Like tiffin is nothing but breakfast, and then to meet his expenses of lunch, dinner. If any additional payment is made by the employer to the employee, then it is 100% chargeable to tax. Next is any other cash allowance. Irrespective of this, is any other cash allowance is given, it will be taxed under the head income from head salaries. Next, warden allowance. So warden allowance is nothing but it is paid to a university or college teachers, professors, okay, who are in charge of hostel for the services they are rendering by the way of hostel in charge, maybe hostel warden. It is fully taxable. Again, next is non-practicing allowance. Now, non-practicing allowance is nothing but it is paid to doctors serving with the government. So, who are not self-practicing, uh, they are providing doctor services, but with the government, they are associated with government. And if they get non-practicing allowance, it will be 100% taxable under the head income from salaries. Next is transport allowance given to employees other than blind, deaf, dumb, okay, or orthopedically handicapped employees. So if any transport allowance is received by an employee who is not blind, deaf, dumb, okay, that allowance is 100% chargeable to tax. So remember students, in exam, if you're given any of these allowances, please charge it to tax. Okay, please take it in the outer column directly under the head allowances. Completely take it in the outer column because it is 100% taxable. Next, let us see. Next, let us see what is fully exempt. Then we'll go to partly taxable. So under fully exempt means whatever allowances I'll be reading out now, that is 100% exempt. You need not take it under this head, or you can take it under this head and show it as exempt and take the amount as 0. So what are those allowances? Allowances received to high court judges. So if high court judges are getting any type of allowances, it is fully exempt. Allowances if it is paid by UNO. UNO is United Nations Organization. If any allowance is paid by UNO, it will be 100% exempt. Next is compensatory allowance received by a judge. If a judge of a court, Supreme or High Court, is receiving any compensatory allowance, remember, fully exempt. Sumptuary allowance granted to High Court or Supreme Court judges. Now, what do you mean by sumptuary allowance? It is nothing but again entertainment allowance, type of entertainment allowance that is given to High Court and Supreme Court judges. Next is allowance granted to government employees outside India. So, if outside India there are certain government employees, any allowance given to them is fully exempt. So, students, these are the allowances which are fully exempt, that is, you need not charge it to tax. On my left hand side, you can see the allowances which are fully taxable. Now, let us understand partly taxable allowances. You all know what are allowances. They are nothing but some amount that is given by the employer to the employee in order to meet certain particular requirements of the employee. Now, there are two allowances which are partially exempt or partially taxable. House rent allowance, which is covered under section 10, subsection 13, clause A, and special allowances covered under section 10, subsection 14. So, in detail, let us see what are these two allowances. Now, obviously, calculation will be in respect of only partly taxable because we need to remove the exempt portion in order to know what is taxable. So, in case of fully taxable, there will be no calculation since you have to take 100% amount in the outer column. In case of fully exempt, there will be no calculation since you have to take 0 amount in the outer column. Only the calculation comes in respect of partly taxable because some portion is exempt, some is taxable, so there is a calculation involved. So let us see in today's lecture how to calculate house rent allowance and what is the figure that you need to take in the outer column in order to calculate income from head salaries, and let us see the different special allowances. So house rent allowance, very important again from your exam point of perspective. So remember, house rent allowance is covered under section 10, subsection 13, clause A. So what is first of all house rent allowance? House rent allowance is a special allowance specifically granted to an employee by his employer towards payment of rent for residence of the employee. See, many a times employee goes to different cities to work. Suppose if I am actually residing in Belgaum, born and brought up in Belgaum. But suppose if I get job in Mumbai, okay, and if I shift myself to Mumbai, and Mumbai is a new city for me, then my employer, if he's giving me this allowance, it means that he's helping me to make payment towards the rent that I'll be paying to stay in Mumbai in order to provide the services to the company which has hired me in Mumbai. So house rent allowance is an allowance given to meet the rent of the house in which the employee is staying in order to meet the in order to provide the services to the employer in that particular city. Now, house rent allowance, whatever the employee will be receiving, it will not be 100% chargeable to tax, or it will not be 100% exemption. So let us see what is the amount of exemption given in respect of house rent allowance. House rent allowance granted to an employee is exempt to the least of the following. When I say least of the following, below there are three situations. In that, whichever amount is less, that amount will be granted as an exemption in respect of house rent allowance. Means the remaining part will be taxable. So let us see, if any employee is working in a metro city like Delhi, Kolkata, Mumbai, or Chennai. So what is the exemption? Exemption is at least of the below, that is actual HRA receive, whatever actual house rent allowance he is receiving, or rent paid minus 10% of salary for the relevant period. Whatever rent he is paying where he is staying, minus 10% of salary. Now, what is the salary? What is relevant period? We will be seeing 50% of salary for the relevant period. So among these three, whichever is lower, that will be the amount of exemption given in respect of house rent allowance, and the remaining amount will be taxable. Next, suppose it is other city. Other cities means other than Delhi, other than Kolkata, other than Mumbai, and other than Chennai. Then, what is the deduction? HRA received, actually received for the relevant period, rent paid minus 10% of salary for the relevant period, 40% of salary for the relevant period. Among these three, whichever is lower, it will be allowed as an exemption, okay, while calculating house rent, taxable house rent allowance. Note, exemption is not available to an SSE who lives in his own house or in a house for which he has not incurred the expenditure of rent. Suppose in Mumbai, I have, okay, my sister's house. Now I am residing in Belgaum, but in Mumbai, when I'm going to work, I have my sister's house or some relative's house where I'm actually staying in their house and not paying any rent, and whatever HRA I'll be receiving, it will be 100% taxable. Why? HRA is given only here. See the first line, it is given only towards payment of rent. Now, if I'm staying in my relative's house and if they're not taking rent from me, then the 100% HRA will be chargeable to tax. So remember, students, if HRA exemption is given only to those employees who are staying on rent basis. Next, now here I have told you all 10% of salary, 50% of salary. Now, what is the meaning of this salary for the purpose of HRA? So remember, salary for the purpose of HRA only, house rent allowance, means basic salary, dearness allowance, and commission as a fixed percentage of turnover. You have to add all these three, and you have to take 10% of that salary in the second point and 50% of that amount in the third point. So salary for the purpose of HRA is nothing but basic salary, dearness allowance, commission as a fixed percentage of turnover. Next. Now here it is given relevant period, relevant period. What is the meaning of relevant period? Means the period during which the said accommodation was occupied by the SSE during the previous year. We know that the income of the previous year is assessed to tax in the assessment year. So period means the period during which the SSE was staying in the accommodation. The period in which the accommodation was actually occupied by the SSE. For the period in which he was not staying in the house, rented house, that period will not be calculated as relevant period. Relevant period means the period on which he is staying in the rental basis, okay, in the form of an accommodation. So this is nothing but the house rent allowance. So quickly, I just recap this. House rent allowance is nothing but allowance given by an employee to the employer for the payment of rent for residence of the employee. List of the below, you have to see where the employee is staying. If he's staying in Delhi, Kolkata, Mumbai, Chennai, these three, lower of these three will be given as an exemption. The remaining amount will be taxable. And if he's staying in other cities, lower of these three will be given an exemption. Remaining will be taxable. Exemption will be given only and only if he's staying in a rental house. If he's not paying rent or not staying in a rented place, 100% HRA will be taxable. And relevant period means the period during which he is staying in the rented place. And salary for the purpose of HRA means basic salary, dearness allowance, and commission as a fixed percentage of turnover if provided in the terms of employment. So students, have you understood house rent allowance? In our next lecture, we will be solving problems on house rent allowance to know actually how the calculation is done, where you all will understand it better. So have you understood house rent allowance, everyone?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Okay. Next is special
Yes,
allowance.
ma'am.
Okay, students. Next we had seen, students, is we completed with house rent allowance. Next is special allowance. Now the different special allowance. This all, there are total 15 special allowances. When I say special allowance means they are again partially exempt, partially taxable. Now what is the exempt portion? If we see, if we calculate the exempt portion, obviously the remaining portion will be taxable. So there are total 15. Among this, I'll tell you all which are the important ones. Okay, but you just need to remember. First, I'm going to tell you what is the name of that special allowance, and then the extent to which that allowance is exempt. Okay, so if it is a any special compensatory allowance in the nature of special compensatory allowance or high altitude allowance or congenial climate allowance or snow bound area allowance or avalanche allowance, then what is the exemption? Rupees 800 or rupees 300 per month, depending upon the specified location, and rupees 7,000 per month in Sishan area of Jammu and Kashmir. Okay. Next, you'll just need to remember this. If it is in snowbound allowance, then what is the limit? Next, if it is a special compensatory allowance in the nature of border area allowance or remote locality allowance, then this is the exemption limit depending upon the specified location. It will be given in the problem, but this is not that important, students. This never comes, but you all need to know for your knowledge. Next is special compensatory allowance, that is tribal allowance or schedule area allowance or agency area allowance. Then rupees 200 per month is the exemption, remaining will be taxable. Now, if any allowance is given to a person who is working in a transport system, so since he's working in a transport system, whatever his personal expenditures are there, whatever to meet those expenses, whatever allowance is given, it will not be 100% taxable. The exemption is 70% of such allowance up to maximum of 10,000 per month will be exempt. The remaining will be chargeable. Children education allowance. Now this is very important. Children education allowance usually comes in the exam. This allowance is exempt up to rupees 100 per month per child up to a maximum of 2 children. So what is the exemption limit? Rupees 100 per month per child up to a maximum of 2 children. Sums on this we will be seeing in a very next lecture. Okay, because since we are falling short of time, we cannot cover in this lecture. Next is any allowance granted to an employee to meet hostel expenditure. This is again very important from exam point of view. Remember, children allowance, education allowance is important. Hostel expenditure is important. Allowance is important. So when any money is given to the employee to meet the hostel expenditure of his children, so 100% is not taxable. What is the exemption? Rupees 300 per month per child up to a maximum of 2 children. Next is compensatory field area allowance, that is specified areas in specified states. Rupees 2,600 per month is exempt. Continuing, continuing compensatory modified field area allowance. Rupees 1000 per month is exempt. Next is insurgency allowance. Okay, that is usually given to the members of armed forces. Okay, which are where they are operating in areas which is away from their permanent location. Usually army people are deputed a permanent location, but if they are working from the areas other than their permanent location, and if they are given insurgency allowance, then rupees 3900 per month is exempt. Next is transport allowance given to dumb, deaf, blind, or orthopedically handicapped. Now see, in fully taxable, we have seen that transport allowance is fully taxable. Other than that, given to blind, deaf, dumb. So if any transport allowance is given to blind, deaf, dumb, or orthopedically handicapped, then rupees 3200 per month is exempt. The remaining is taxable. Underground allowance, if it is granted, if any employee is working in underground mines, and for that if he's been given allowance, rupees 800 per month is exempt. Next, any special allowance in the nature of high altitude allowance granted to the member of armed forces who are operating in high altitude areas. So for altitude of 9,000 to 15,000 feet, suppose if the altitude length is 9,000 to 15,000 feet, and if the armed force is working there, and if he's getting high altitude allowance, exemption will be rupees 1,060 per month. And for a feet which is above 15,000 feet, he will get an exemption of rupees 1,600 per month. Next, any special allowance in the nature of special compensatory highly active field area allowance, which is again granted to members of armed forces only, then the exemption is rupees 4,200 per month. Next, any special allowance in the nature of island duty allowance granted to members of armed forces in Andaman and Nicobar and Lakshadweep groups of island. If any armed forces is working in any island, okay, which is in Andaman, Nicobar, Lakshadweep, they will get an exemption of allowance up to rupees 3,250 per month, and the remaining will be taxable. So these are 15 special allowances which are given only in special cases. Why it is called special allowance? These are not given in ordinary cases. These are all special, given for special people, like some are for armed force, some are for blind and deaf, some are for working in underground mines, some are for working in high altitude areas. So these are special allowance given to special categories. Okay, and the amount of allowances is not completely taxable. Okay, there are certain exemptions which we have just seen. So among all this, majorly children education allowance and hostel allowance is majorly asked. Okay, in our next lecture we will be seeing problems on only partially taxable cases like HRA and special allowances. So then you all will understand better the theory that I have explained now. Now, any doubts you all have, students?
Ma'am, I have a doubt.
Yeah, tell me.
Ma'am, under section 16, there is a professional tax
Hmm?
which is charged.
Yeah.
So, for a salaried person, why the professional tax is charged, ma'am?
See, professional tax is for the services that he is giving to the organization. Now, when I am working from Jain College, it is my talent that I am putting in, okay, for the services that I'm rendering, okay, because any person, if he is rendering any services to an organization, provided he has an education, he has a talent, then only the company is going to keep him, right? So for it is not, don't take the professional tax for the only the professional people. It is for the services that an employee is rendering to the employer. The government has mandatorily kept professional tax. So professional tax has to be paid by everyone who is working, okay, as an employee in the organization. So it is usually paid by the employer, okay, and it is usually paid by the employer, but from the salary of the employee, and that is why the deduction is given.
Okay, ma'am.
Don't take the literal meaning of professional tax is to be paid only by a person who is carrying out his profession. Don't take the literal meaning of it. Okay?
Okay, ma'am.